market runs back up, I'm becoming more and more comfortable with a sell over a buy on the initial spike. So again, just keep that in mind. Data should be coming out in the next 20 seconds or so. Spread is actually still pretty reasonable on this. It came out 0.1. It came out as a buy, so it missed our trigger. As I said, I had increased mine. If you did take this trade, with the lower trigger, you're going to want to exercise extreme caution. I would look to get out as soon as you can. Again, my advice was to increase your trigger anyway. But if you didn't, again, look to get out as soon as you can. As the market does go up, assuming we get a decent move up, there's a potential for a sell. Also, you want to bear in mind we have some conflicting data here. This row 2 came out at 0.2 from a sell trigger. If you got in, let me know what area you got in, and it makes it a little easier for me to help you manage. Looks like pre-release was around 37. I'm assuming most people that did get in are probably around break-even or a few pips in profit, depending on their feed. Again, my confidence level on buy wasn't as high, so I would exercise caution and look to take your profit fairly soon. 50 is our first level up from the pre-release price. Isn't quite 30, but again, given the data conflicting the way it has and the overall down pressure, I've kind of seen the trough down here, pre-release, where it kind of ran up, and then we had a settle down right before the release. Looks like pre-release was actually around 37 or 38. Even on the buy side. So almost everyone who did take this, if someone took it, should be a profit right now. 49.50 level is going to be flew right through that. So is anyone in this? This is what we need to know. I would definitely not hold it past 49.70. That would be my kind of final level. All right, so we just hit that 70 level again. If you want to take a short position at that 49.70 level, not a bad place. As I was saying, if this 70 level doesn't hold, the other way to trade this is on a break. If we see a break and hold above for 10 or 15 minutes, what will happen is a lot of times it'll run up and it'll come back down and retest. And when it retests the 70 level from 60 to 70 level, that's where you would make a buy. So you can play both sides of this market if you'd like. I'm a little more comfortable with the short side from a long-term standpoint. But from intraday, either way is actually reasonable. You can play the short from 49.70 area, which is about where it's at now, or if it breaks, take your loss and you can play it long. Did anyone take the trade from the 49.60-70 area? Just want to get an idea on it if anyone's in this market on this particular release or this particular level that we discussed prior to the data. All right, so we got a couple people that are braving the storm, so to speak, here. So we'll hold on for a few minutes and see what happens. See if we get a break or if it moves on down. For those of you that trade, it looks like most people got in right around 65. If you give it about 12 or 15 points, that's going to give it up to about 75 or 80. You're only risking about 12 or 15 points on the trade for the potential to come back down to possibly 49.15. So risk to reward is there. We'll just see what happens. This is the hurry up and wait period for traders. Yeah, that's fine, Jeremy. The lines that I draw are actually pretty basic. There's a lot of people out there that teach how to identify support, resistance, and trend lines and all that stuff, and they have very technical and complicated ways of identifying them. To be completely honest with you, the trend lines, the support lines, the fib levels, everything that I've used that has worked for me have always been the most obvious. Something that just is, to me, that's an obvious level of resistance. It sticks way out. Anytime you see, a level of resistance that's pretty obvious, then, if you can identify some other levels as well that overlap that, then you're that much further ahead.